Okay, so thank you everyone for joining us on this weekly series. GF Ideas India community is organizing during this time when everyone's basically under lockdown. Um, a little bit about our organization, because I know that we have many new entrants into the community this week because everyone's excited about the session we've set up. So I'm managing director of the Good Food Institute India. We're a global nonprofit with offices in India, the United States, Brazil, Israel, Europe, in London and Brussels, and then East Asia in Singapore, Hong Kong, and mainland China. And what we do is we focus on accelerating the alternative protein sector, or the smart protein sector, which is a very exciting and relatively nascent area of work, which involves new and exciting products called plant-based meats, cultivated meats, and then also replacements for eggs and dairy as well. And the reason why we do this is well documented. Industrial animal agriculture has tremendously negative externalities on the climate, on food security, and yes, on global health in the form of pandemics as well. So this week we have a pretty exciting show lined up for you on this webinar. I'm going to quickly introduce our experts on this webinar, and then just get moving on to questions because we don't have that much time. So really quickly, Mark Kahn is a consummate underachiever. Mark is managing partner at Omnivore, a venture capital firm based in India, which funds entrepreneurs building the future of agriculture and food systems. Omnivore basically pioneered agri-tech investing in India, backing over 20 startups since 2011, and currently manages 9.35 billion rupees across 2 funds. Every day, Omnivore portfolio companies drive agricultural prosperity and transform food systems across India, making farming more profitable, resilient, and sustainable. Mark was previously executive vice president at Godrej Agrovet, which is one of India's foremost diversified agribusiness companies. He was responsible for corporate strategy, M&A, R&D, and new business incubation. And earlier in his career, he worked for Syngenta and PFM. He has an academic background at the University of Pennsylvania and an MBA from Harvard Business School. And he's a member of the Confederation of Indian Industry, National Council on Agriculture, among a number of other important bodies. Shruti Srivastava is a principal at Omnivore, where she evaluates and manages investments in agricultural technologies, innovative foods, and rural finance. Prior to joining Omnivore, Shruti worked with Acumen, which is a global impact-focused fund, where she led the fund's clean tech investments in India. Earlier in her career, Shruti worked with the International Finance Corporation, the private sector investment arm of the World Bank Group, and she looked at investments in manufacturing, agribusiness, and service sectors in South Asia. She graduated with a bachelor's and master's in electrical engineering from the Indian Institute of Technology, Madras. All right, so let's get started. Mark and Shruti, can you hear me well?
Yes, we can hear you.
Great. Okay, thank you so much for being here, both of you. It's great to see you both, and I hope you're doing well during these troubling times. I'm going to really quickly get off to a start with the basics. I would encourage everyone to take a look at some prior work we've done with Omnivore. So Mark was part of our the Good Food Institute India's podcast series last year called Feeding 10 Billion, and he also led a panel at the Future of Protein Summit, which we hosted in November in New Delhi. A question for both of you. In a couple of minutes, would you please describe the investment ethos at Omnivore and how the alternative protein sector fits into that ethos, particularly the link with agricultural value chains?
And you're right there, Shruti. Sorry about that, folks. So Omnivore funds entrepreneurs that are building the future of agriculture and food systems. We've been around since 2011. We were the first agri-tech focused venture fund in India. And our vision is to transform Indian agriculture. So everything that we do, every startup that we work with is fundamentally trying to impact the lives of the 130 million Indian farmers and their families, and the roughly 25% of the Indian economy that is agriculture plus agribusiness. We are early stage investors, so we typically come into seed and Series A rounds. We've gotten things off the ground from zero, but generally we prefer to come in when there's a little bit of proof in the pudding. And we've been interested in alternative protein for a number of years. In our vision of Indian agriculture, there are three elements that we're trying to transform, three pillars to our theory of change. The first is radically increasing the profitability for Indian farmers. Indian farmers are essentially like micro SMEs, right? 130 million micro SMEs. And they struggle for a variety of reasons, but fundamentally, they don't have enough bottom line, right? When you take all of the revenue they make, deduct out the costs, remove the financing, there's not enough. And so one of the main things we focus on are ways to improve their profitability. The second thing we look at are ways to increase their resilience, right? So for the maths kids, how do we lower the VAR, right? How do we reduce the standard deviation in the amount they make from season to season? How do we integrate them in value chains and help them reduce their risk? And finally, we look at issues of agricultural sustainability. How do we move India from using huge amounts of water and chemicals and unsustainable farming practices to an ecosystem that will allow agriculture to thrive over the next 100 years? So alternative protein, especially plant-based protein. The second is, right, does India have the potential to become a global powerhouse because of our incredible diversity of plant-based proteins that are grown in India? So India is the world's largest producer of pulses, a very significant producer of millets, and this is generally the feedstock for plant-based proteins. So we're interested from that angle. And we're also tracking the cell-based cellular protein space and the fermentation space. Cellular, I wouldn't say that India is at the bleeding edge, but India is one of the best ecosystems for fermentation in the world. That's where Kahn came from. And so we find it all quite interesting, and it fits very nicely into our thesis.
Shruti, would you like to add anything there?
Just one more point. We also believe that India has had a history of making frugal innovation work. So while a lot of cost structures for alternative proteins have not been such that they can see mass adoption, we believe that Indian systems of frugal innovation might actually help drive those costs down as well.
Got it. And once again, for people who are new to the sector and who are joining to hear Shruti and Mark speak more generally, I would encourage you to check out our website to learn more about the alternative protein sector and the basics of the products that we're talking about. So Mark, you mentioned with respect to agricultural value chains and the disconnection of farmers from markets, a lot of that huge farmer family cohort in India is quite vulnerable, is subsistence focused and underproductive, to use an economic term. Would you characterize a little bit why that is? Because it's quite typical of low and middle income countries. We are a huge instance of that because of the size of that cohort. But could you speak about some of the biggest causes of that, just that vulnerability?
Sure. I mean, look, fundamentally, the terms of trade for agriculture are generally pretty terrible, right? People have described agriculture as an entire world where you buy retail, where you buy at the retail price and sell at the wholesale price, right? And that's farming in a nutshell. Why India specifically has challenges, it's a couple things, right? So we have a system of agricultural marketing that was initially well-intended, right? The idea behind APMCs and mandis and these sort of regulated markets, the idea here was to protect farmers. But ultimately, it's resulted in a world where, for lack of a better way of putting it, Arthias have had their feet on the throat of Indian farmers for, thousands of years, to be honest, but it's been enshrined in law by the APMC system. At the same time, that same group of people are also the village money lenders. They're also the agri-inputs dealers. It's really one community and a very different community to be very frank, at odds with each other. And the system in India for many, many decades has focused on cheap urban food, right? From a policy perspective, has focused on cheap urban food, right? So if you think about it, anytime prices start going up, right, there is public pressure from the cities to reduce those prices. Most famously, onions in the late 90s, right? But that happened even last year. And so anytime there is food inflation, there are efforts to stamp out food inflation. You need to stop thinking of food inflation as a bad thing. It's actually how farmers make money. They benefit in that environment, or at least can capture a bit more. And so you have a system where the government focuses on cheap food, where the entire system of agricultural marketing deprives farmers of good terms of trade. You don't see a lot of farmer financing trickling down to the smallest, most vulnerable farmers, right? So most farmers are heavily dependent on local informal money lending. And from an agricultural inputs perspective, as I said before, they pay retail, but specifically, they struggle with getting the right products at the right prices with the right advisory to drive performance. So when you combine all of these things, they're left fairly vulnerable. Their bottom line is not great. And they're pushed from a policy perspective towards suboptimal outcomes. So fertilizer subsidies are a great example of this. Again, well-intentioned Green Revolution 1.0 idea, right? And it was required. Farmers weren't going to invest in fertilizer, and we weren't going to be able to have food security in India if you didn't have them start using fertilizers. But because of the way that policy is established, we massively abuse nitrogen. We don't use enough of the other elements, let alone micronutrients. And as a result, soil health is in free fall. So there's a lot of policy elements that drive suboptimal outcomes. You know, probably the biggest example of that is the Food Corporation of India, right? Sit there in Haryana, Punjab, Western UP, and encourage farmers to grow one season of wheat and then another season of rice, even though it's awful for the water table, terrible for the soil, and doesn't really solve anything because most of it gets stored and rots. So you have challenges to this system. To be clear, you also have incredible success stories, right? You have the dairy, and well, a lot of it's animal agriculture related, but the dairy industry in India, the aquaculture industry in India, the horticulture industry in India, right? You have value chains that have moved away from these terrible terms of trade, but they are the norm.
Yeah, fair enough. So you highlighted there that animal agriculture does build in some resilience for many farmers and allows them to access higher value in the markets, right? Like currently, the way that the pandemic is progressing, it's actually creating a lot of vulnerability or exposing some vulnerability of that system as well, right? So you have a lot of risk in terms of farmers aren't able to sell through chickens because of consumer perception and prices falling, and they have to get rid of those chickens, and meat plants in the US are being shut down. So there's a lot of vulnerability there.
Yeah, but these are two very different things, okay? Meat plants in the US are not being shut down because of animal welfare. They're being shut down because they're hotbeds of low-income workers that have been exposed to coronavirus and are getting sick. The challenge in India with respect to the poultry industry is that in the first few weeks of this epidemic, it was rumored and driven, accelerated via WhatsApp that non-veg was causing this epidemic. And so poultry consumption saw free fall, right? But that's no different, right? The fact that you have challenges there is no different from the fact that horticulture farmers throughout India are trashing their crops because they can't sell it, right? So let's not conflate all of these things, right? The crash in poultry prices was because of rumor, right? And now pretty much every farmer in India that has a perishable product is struggling because value chains have been radically disrupted. And people forget how much consumption goes through HoReCa channels, right? Hotels, restaurants, and caterers. Yeah. We don't just only eat at home. And in particular, for categories like horticulture and non-veg, a lot of that's eaten outside of home. And because we're not eating outside of home, consumption of those categories have plummeted, prices have plummeted, and farmers are stranded.
Yeah, fair enough. Okay, I'll step away from that point for a second. So with respect to alternative protein specifically, both Shruti and Mark, some of the fundamental changes that might occur as a result of the current scenario, if you model out that the current scenario persists for a significant amount of time, let's say several months, several quarters, multiple years even, and these are hard problems to fix, right, in the supply chain, so it may actually persist. Could we think through, thinking back to your answer about why alternative protein, could we think through why that works out better for farmers? What are the scenarios in which alternative protein benefits farmers or people along that supply chain as a product area into which to switch, or into which to diversify?
Sure, I think so. Let's go back 6 months, okay? And we've had this conversation before, and we've presented on this. There's definitely an interesting opportunity domestically in India for consumers that want to try alternative protein, that want a substitute for the use of animal products in what they consume. And we've talked about segmenting the market to address that. Right? It's probably more non-vegetarians than vegetarians. It's probably higher income rather than lower income. It's more urban rather than rural, right? And ultimately, whether you're talking about a market of 5 million or 50 million, right? I think I liked when the folks at Epigamia talked about the fact that they think there's around 50 million Indian consumers that make their own decisions about food, that aren't fundamentally driven by what their mother wants, what their spouse wants, right? What their tradition wants, what their culture wants, but they make their own decisions about food. And so if you say there's 50 million Indian consumers as a potential market for this, at least in the first few years, in the first wave, right? Then how do we meet that demand? I think the challenge is, again, going back 6 months, is if you listen to those panels and podcasts, the biggest opportunity was Horeca, right? The biggest opportunity was, okay, since people tend to eat fairly conservatively at home, right? It's really, dal, chawal, sabzi, roti, right? Really, home food is home food. Then if you're going to capture that market, you're going to capture that market when people eat out, when they're at a restaurant, when they're at a bar, when they're at a hotel, when they go to a catered event. None of that's happening right now, right? So I think for now, the only channel that you're going to see a lot of adoption, right? And by the way, modern retail has been slammed, and people are not making risky choices or experimental choices when they're going out for their brief period that they're able to get groceries, right? They're really focused on the staples they need, the vegetables they need, some fruit, right? It's all pretty basic stuff. I think for entrepreneurs that are looking at alternative protein right now, I mean, it's no surprise, it's going to come down to kind of food delivery, right? And whether you can convince, right, restaurants that are, to be clear, just struggling to do anything to experiment with the category, or cloud kitchens and food delivery services. I've always been less bullish on the FMCG angle here, because again, I don't think people experiment as much at home, but maybe temporarily they might, right? For the simple reason that we're all locked at home. There is nothing to do but watch a lot of Netflix, drink more than we should, and cook. I have cooked more in the last 2 months than I've probably cooked in my entire life. I think we're all going to come out of this chubbier and slightly alcoholic. But because of that, I think, whereas I was very skeptical about FMCG, if you can find a way to get product to consumers, this may be a time to get them to experiment with it. And to be clear, I don't think this is going to translate to significant volumes, but if you can find early adopters that want to try this and get them to make videos, because Lord knows we have nothing else to do, and at least build some interest in your product, then I think that potential is there. With respect to the farming side of it, I think, look, a lot of research and work needs to be done on those value chains. This is something GFI is doing with the Gates Foundation on millets. There's other work that needs to be done on pulses. Do I see a short-term impact from that? No, I don't. But I think it's certainly work that can start now, and hopefully, right, as the alternative protein space develops, we can find ways to integrate Indian smallholder farmers that are growing millets and pulses into it, and hopefully not just buy from mandis and from banyas and artias, right, and actually build some, get an FPO together that's growing millets and pulses, right, and buy directly from that FPO and build sustainable value chains.
So Shruti, the question was, thinking through the lens of alternative protein and how it might impact the supply chain. Mark's answer at the end there was, it's not going to be in the short term. The goal is to build proofs of concept from farm to fork, but that takes a long time to get going. Do you have anything to add to that?
More than that, there's also product development that will need to happen. So if you look at the current legume varieties that are being grown, the protein content is not that high. So in fact, ICAR is developing strains which will have higher protein content so that the costs at the isolate level make sense. So there's a lot of work that will need to be done before we can actually integrate millets and legumes in these value chains.
Got it. And if anyone wants to know more about that kind of work,
it's
sorry,
2 to
go ahead.
3 year time horizon at the very minimum.
Yeah, and I might say even longer. If anyone wants to know more about kind of the indigenous crops work we are doing that is supported in part by the Bill and Melinda Gates Foundation, please get in touch. You can email us. There are also similar projects running. There's the Smart Protein EU project, which is investigating legumes, also over a 4 to 6 year time horizon. But of course, that's not going to happen fast enough to impact farmers and supply chains in the short run while we're going through this pandemic. So I think I want to hear from you both about what the investment ecosystem looks like right now. So many of the entrepreneurs in our sector have expressed concern to us about investment firms possibly pulling back from deploying capital and the cost of capital becoming much higher now. Could you speak through a little bit, to the extent you can, about the mindset within VC currently? Is capital being deployed to different sectors? Is the quantum dropping? Just naive questions around that.
So everything I'm going to say is anecdotal because no one really has data yet. So let me first qualify everything I'm saying by, here's what I'm hearing from my peer group. If you had a rupee for every time a VC says, right, we're still investing, the shop is still open, you'd be rich, right? VCs have been parroting this for, constantly since this crisis began. And I think there's an element of truth and an element of fiction to it. The truth is, there is a huge amount of capital that was raised over the last few years from LPs into VC and PE funds. And that money has to be deployed, right? It's not like we can not deploy it, right? So to that extent, there is plenty of money out there that can go into companies. I think people are still looking at deals, doing deals. I think right now what you're seeing are deals where the due diligence was done prior to the crisis, right, being wrapped up. So when you're seeing activity right now, most of it is stuff that's, deals take a long time to close, right? People can tell you how fast they are, but usually about 3 months, right? So some of the stuff you're seeing right now is stuff that was wrapped up, is stuff that went into documentation, right, and final legal and accounting due diligence in late January or February. So you're going to keep seeing some of that activity. I think there are new deals that are being done as we speak, but I think in general they are smaller checks. I think there is a little bit of looking the standard, the bar has been raised for what's going to happen in the next few months. The easiest way to think about it is VCs are just going slow. And historically, one of the things that drives VCs is FOMO, fear of missing out. And I think right now, no one has FOMO, right? This is a no FOMO environment. And there's a couple reasons for that. One is we're all very focused on helping our current portfolio companies, right? Every portfolio company has been impacted by this, unless you're like in the web meeting business or in online education, right? If you've got a real world kind of not totally digital business, then you've been impacted. And so VCs are spending much more time on portfolio support than we usually do. So the amount of bandwidth that we have to look at new deals is less. The other thing is, frankly, I think it's pretty hard to back a startup, especially in real world ag and food, unless you've done some physical due diligence, unless you've gone out, met their distributors, met their suppliers, and no one can do that right now. So it's definitely not a dead period. It's a go slow period. And I think, with respect to issues of valuation, look, valuation's coming down. But that was something that, valuations had gotten incredibly overheated. There was going to be a correction. This is probably that correction, but maybe not. Maybe we'll bounce right back to where we were. But I think at least for the next 6 to 12 months, we're going to be in a place where valuations are more muted and where VCs have less FOMO, because if they miss something in the seed, the A is not going to be so expensive that they can't, go back to it at a later time and invest, right? That's a lot of what drove FOMO was, the seed was $2 million for 30% or 26. And then all of a sudden they raised an A, 9 months later, $12 million, right, for 20% or 25%. And as a result, there was a huge price to pay for missing an earlier round. I think that compression is going to result in VCs being a little more chill about whether they come in super early or come in a bit later. That said, and I know all of that sounds terrible, here's the good news. Everyone's stuck at home. And so getting a 20-minute, opportunity to pitch a VC is probably easier right now than it's ever been, right? If someone wants to pitch me and wants to catch me on Zoom for 20 minutes, cool, great. There is, we all spend huge amounts of time. I think my whole team has realized that we spend a massive amount of our lives driving in traffic in Mumbai and Bangalore and Delhi, and flying around everywhere. And I think because of this, there is more time to chat with entrepreneurs, to look at new things that are being pitched to us. So I guess what I would tell entrepreneurs is, don't despair. Right now is actually a great opportunity to get a deck in front of a VC, to have a conversation, have a second conversation, and to get to the top of their, attention, so that when things reopen, they look at you more seriously than they might have, right, if you pitched them when they were in the middle of doing a million things, getting a million pitches. And so I would focus on, get some time from VCs you want to meet with, make good pitches, get them to follow up in terms of getting the information they need to do some early commercial due diligence. And then when this chaos gets a little bit better, you'll be in great shape to move quickly.
Shruti, let me build off of that and put the shoe on the other foot for a second. So you're an alternative protein entrepreneur. Everything's dead. You can't go to the lab currently. You have some product stock. You were planning a food service launch. As we've all discussed, food service, restaurants, top chefs, etc., would have been a great way to launch this category in India and get feedback, real world, real experimental data, natural experimental data, etc., from consumers. What's your battle plan in the next 3 months to actually get that real world feedback and then pitch for investment so you can actually have runway to scale up?
I think one of the things that a lot of firms need to recognize is, unlike EdTech or WebEx kind of companies where business would continue as usual, there would be hits that will happen, right? There would be hits and there would be misses. So here, the battle plan needs to be more focused on survival than actually winning for the next 3 months. Because the truth is, you can't really work on product development right now. You have no way to get to the lab, at least not till the next 2-3 weeks. Even after that, it's going to continue to be slow. Modern retail is not going to pick up for the next 2 months. QSR maybe even longer. So what you can do is probably tie up with a few influencers who can possibly use social media to talk about your product, because they have the ability to be able to use this to cook at home, right? There's a lot of very cost efficient marketing that you will need to do to at least get some buzz. You can't really put the product out there for testing because you don't have the ability to make that much of product right now. So go into what we call cockroach mode is what I would say.
Yeah, so speaking of cockroach mode, so yeah, sorry, go ahead.
Conserve cash, reduce burn, spend absolutely whatever minimal is required. That's what I would recommend.
Got it. Yeah, thank you for all the questions and the comments. Just to let you know, it's 6:35 p.m. Indian Standard Time. I'm going to go until 6:50 p.m. and then I'm going to turn to questions from the audience. So speaking of cockroach mode, we're currently operating under, I think this is the most uncertain environment that many of us will ever see in our lifetimes. We don't know the order. Yeah, we don't know the order of magnitude of the size of this elephant in the room. We don't know if this is an 800-pound gorilla, an 8,000-pound gorilla, because that's how exponential growth works of a pandemic. What are the best pieces of advice that you can give entrepreneurs about decision making under uncertainty and just navigating these possible end times? So one was going into cockroach mode and conserving cash, but what about other pieces of advice you can give us and entrepreneurs about decision making under uncertainty?
Look, I think probably one of the biggest things is just transparency. The VC and startup ecosystem is one of those worlds where everyone's talking about how they're crushing it all the time. No one's crushing it right now. Okay, Zoom is crushing it. Baiju's might be crushing it. But most people right now are hurting. And I think being transparent is something that oftentimes you're punished for. I think right now, there's no price to be paid for it, right? Be transparent with your teams, be transparent with your investors, with your angels. It's the only way you're going to be able to kind of get through this. And I think taking, people have said this before, take hard decisions early, right? Portfolio companies, are mutually agreeing, right, to lower costs, mutually agreeing to defer expenditures, delay capex, right? The longer you wait, the more vulnerable you're going to be if this is worse than we expect. And, I think there's a balance between optimism and realism. I don't know if folks have heard about something called the Stockdale paradox. It's one of my favorite kind of aphorisms. And it refers to, it's sort of a modern version of Stoicism. So Admiral Stockdale was a US military officer who was in the Vietnam War. He was a pilot. And he was shot down, captured by the North Vietnamese. He was the senior most POW in their worst prison camp. And he survived through the process. He was in prison for 6-7 years, tortured regularly. And he developed something that was later called the Stockdale paradox. And the Stockdale paradox was the people in the POW camp that thought they would be out in 2 months, 3 months, home by Christmas, as they said by then, died because their spirits were broken pretty quickly. When they weren't home by Christmas, they lost hope and they died. And the people that thought it was going to be absolutely awful also died, right? Because they never had any hope to begin with. The Stockdale paradox is the people that survived the POW camps were the ones that were able to understand that right now it sucks, but it's not going to suck forever. Right now it's horrible. You have to be as realistic as possible about the situation that you're in, while also acknowledging that human history is very long, right? And eventually things stop being bad. And I think, I've listened for weeks to people talk about, no, India, we have BCG vaccine. No, we have hot weather, right? All of this stuff that was, let's put it clearly, this is WhatsApp uncle science. It's not actual science. Because the truth is nobody knows right now what's going to happen. Literally nobody. No world leader really knows, right? There are incredibly incompetent world leaders that have made a mess of this. There are incredibly brilliant world leaders that have made a mess of this. No one's doing a great job. So we have to deal with this massive level of uncertainty. And I think the only thing you can do is just be as realistic about how bad it is right now, while also having some hope that this will not last forever.
Shruti, I have a question about, so what, at this time, let's say you have new deals coming across your desk, and let's say you have the ability to do them, both of you. What are the three most important qualities that you're looking for in entrepreneurs now? And is this a different answer than you would have given 12 months ago when markets were booming?
So, well, the bar for the deal definitely goes higher now, right? Because it's not all rosy cozy right now, the way it was, say, 6 months ago. And so the kind of entrepreneurs that we generally look for anyway are the ones who have more of a resilience fiber in them. And so their ability, we look for founders who have a battle plan for what they want to do, but who also have the ability to be flexible to mold things around as they go along. That said, again, doing deals is going to be subject to diligence, since we're not able to really get out there in the field, really spend time. So, for example, for a CPG or a QSR piggybacking alternative protein startup, we would have wanted to see how the traction would be out there with the consumers, which won't be the case here. So all of that would definitely impact deals. But yeah, in terms of founders, I don't think a lot of difference would come in terms of who we would have chosen 6 months ago versus now.
I would just add one point to that, which is the dependency of the startup on a large future fundraise was something that we were comfortable with 6 months ago. And right now, if we saw a startup and they're like, look, I only need, I need 5 crore right now, but in order for me to survive, I need in 12 months to raise 20 or 30 crore. Yeah, I'm not sure that that's going to be something that we're super keen on. I think, if someone is coming to us for a raise right now, they need to be able to take whatever we're investing, make it work for 24 months. And not plan on a massive fundraise on the other side of that, because, to be clear, things will get better. We're just not sure when.
We call
I understand. So
versus grow and hold alternative, right? So we would want that our cash gets the company to a situation where their future cash needs are for growth and not for survival. So if they had to hold at that level of growth, they could do that with the amount of cash their internal operations were generating.
Got it. I mean, there are going to be technology areas that are more fundamentally nascent, right? So even fermentation, for example, yeah. So just the cost modeling, the volumes, etc., at which it makes sense to scale up. I mean, to actually bring to market products coming out of biotech and fermentation, which, to be clear, had been looking like they were intersecting with food pretty rapidly until this happened and capital became much more scarce. Those still remain promising opportunities, right? So what's an alternate pathway now for those companies? Like, is there strategic capital they should be looking for? We've been essentially saying, I did a webinar a couple of weeks ago saying, if strategic partnerships were important before, I mean, they're super important now, because you don't have the cash to put your own pilot plant up now, right? So is there a pathway there that makes sense?
If there are grants you can get, if there are strategic partnerships you can get, I think any form of non-traditional capital is good right now.
Got it. Switching tack a little bit. So Shruti, you have a background in clean tech, clean energy, and other areas. So could you speak a little bit? Of course, COVID notwithstanding, COVID is a confounding gorilla on all of this stuff. But could you draw some parallels between clean tech in India and where it was when you were investing in it and how it grew, and the beginning of an industry like this? And what's similar and what's different?
So for clean tech, a lot of cost structure started making sense because of the government support that it got. If you look at the cost of production per unit, it actually ended up beating coal for a lot of larger power plants, largely because the land was given free, right? So clean tech, the one that worked in India, is a very different animal. There was a hell lot of government support that was given for making it work. Especially if we look at solar power plants. That's the only part of clean tech which has really gone out and proved its model so far. Everything else is very, very nascent. All of your biomass related stuff did not really work out as well. Again, because while the heart was in the right place, the cost economics were not working. And that's one of the fears that we have with respect to a lot of companies that we have seen in CPG in general, not just alternative proteins, that while the thought makes sense, the cost structures need to still work out.
Okay, so this is my last question before we open up to questions from the audience, and I see a lot of questions coming in about fundamentals and how you are thinking about alternative protein more generally, not so much COVID related. So I'll ask this question. Let's say today, in these times, some LPs come to you and say, here's a fund, we're doing an alternative protein fund in India. What are your specific, like what's the RFP here in terms of the kinds of companies that you are going to make bets on? Are there specific themes within alternative protein that make sense even now?
Yeah, I mean, I think there's a lot of actual hard science that needs to be done around plant-based proteins, right? So I think that's a big opportunity. I think building out plant-based value chains, whether as feedstock, whether it's domestically or for export, I think QSR models are interesting. I think FMCG models are interesting. Again, most of the plant-based space, there's an interesting opportunity in eggs, in dairy, in meat, right? There's an opportunity in cellular, though I think a lot of that is another technology horizon away before it's really commercialized quickly. I would say that I don't think there is currently enough deal flow in India for a 100% India only, alternative protein fund. But I think if it's part of a regional fund that's doing all of Asia, right, or part of a global fund, or it's something like Omnivore that does agri that puts alternative protein under that, then there's certainly kind of scope to make a fund work there.
Got it. Okay, so we're nearly at 6:50, and I want to be mindful of time.
Sure.
So let's open up to questions from the audience. So one that is coming in, and I think it's great to get this practical advice from you folks. So policy levers are usually very large and outside of the scope of any single startup.
100%.
Right? So yeah, so you raised some issues that are so over our heads that they might
Can't do anything about them.
Yeah, exactly. So with respect to all of that, there are some issues like MSPs, issues on import-export, restrictions, all of those things. So what are some tactical pathways for entrepreneurs to consider pulling policy levers and representing to government to actually get stuff done so that these fundamental restrictions are removed?
Look, I think there is some good policy advocacy that's happening with respect to agri and food in India. CII does a great job. FICCI does a great job. GFI, you guys are doing good work. I don't think meaningful reform is easy to achieve, right? I saw some of the questions, MSP hurts processors. Sure, yeah, MSP hurts lots of people. It also is applied in a slapdash, highly regional and totally erratic kind of way. So MSP actually doesn't mean that much, depending on where in the country you're procuring. I don't think there's much you can do about policy, honestly, other than in the very long run. I would avoid spaces that are defined by policy. And, if you're at odds to that policy, I don't think the alternative protein space in India is defined by policy, right? Most of the feedstocks that we're making, you can procure. They're not heavy MSP procurement feedstocks. And, you're trying to sell products as alternatives to the animal protein space, which itself was never very regulated or controlled or influenced by government policies. So I don't think there's much you can do about it. I don't think there's much you have to worry
about. Got it. Yeah, so there's a question about sizing, which, to be clear, is something that we're working on at GFI India, which is it's a complicated question because there are no products in the market. So there's no experimental data for us to see who's responding to it and how, and ladder up from there. Could you do a sizing for this market that's kind of back of envelope?
Again, I really liked the Epigamia number of about 50, 60, 70 million consumers that make their own choices about food. I think that was the most intelligent way it's been pitched to me so far, right? If you ask what's the size of the vegan market in India, it's freaking small, man, right? Most vegetarian, right? Again, we have the high level numbers, right? Which is there are about 30% of Indians that are vegetarians that don't consume eggs. But by the way, they consume huge amounts of dairy. So I think in general, when you're trying to do this through how big is vegan? Vegan is small. It's really small, right? It's an urban, upper income, forgive me for saying this, fad. I do think that there is a growing global vegan movement, but I think most Indians that have defined themselves as vegan, they may very deeply believe in it, but it's come about because of global exposure, not necessarily anything that was kind of indigenous to the culture. I think in general, the idea of independent decision-making consumers is probably going to be what drives most of this stuff. I think that's the most relevant way of thinking about it.
Yeah, and we in the episode that we did with Mark for our podcast, Feeding 10 Billion, we talked a little bit about this, and this is the work that's underway at GFI India right now. In fact, Wednesday through Friday this week, we've been in very long sessions on consumer insights and trying to narrow down to these different psychographics and what the need state is for someone to consume something like this. Is it underpinned by the need for convenience? Is it underpinned by a switch to something that's more sustainable, etc.? So yeah, I mean, broadly, these are all things that are converging, but we like the way that Epigamia described it too. Shruti, do you have anything to add?
The biggest thing with Indian consumers is taste. It is always the biggest thing, right?
Yeah.
It's taste, it's price, it's convenience. So when you solve those, and you truly solve those, you've got a shot.
Yeah, I should underline that. So the entire theory of change at GFI is products that taste the same or better and cost the same or less. It's as simple as that. So, for every kind of meat that people want to eat, every kind of animal sourced food that people want to eat, these are necessary preconditions, or you're not going to actually be able to target those consumers in a reliable, repeatable way. Shruti, did you have anything to add to that?
Price continues to be a huge driver. People will not, even the 1% super globally exposed consumers will not switch to say a dairy alternative that costs 3x as much as their regular one as part of their daily diet, right? So price will continue to be a huge one. Price, taste, and also the functionality that all of these different products are servicing.
Yeah, so just to address something that's coming up in the comments, there could be products that are targeted at vegetarians that are center of plate, high protein. That's obviously a big category. It's going to happen. It's going to grow. The thing that we are looking to target or give people an option for is non-vegetarians who might be looking to switch into something else that happens to be sustainable, happens to be kinder and better for the planet in so many ways. And that is centered on taste and price relative to meat, right? Relative to those things. Shardul, do you want to pick? I'm having trouble passing these questions. Did you want to pick some questions as well and come in?
Yeah, sure. So a couple of questions were really nice. One of them basically asks Mark and Shruti about what are their views on alternative protein business models in the next couple of years horizon. B2C with a consumer product, B2B with a consumer product, and B2B ingredients manufacturing, like isolates, concentrates, stuff like that.
Can I expand on that question a little bit? And how
Yeah.
enduring are these changes? So Mark, I mean, people change their behavior during a recession. That is going to happen here. Packaged foods is going to grow. How enduring is that change?
Look, I like to be able to say I don't know. It really depends how deep is the recession, whether the bounce back is V-shaped, U-shaped, or God forbid L-shaped. And to what extent we continue to go back into lockdowns in the future, right? I think what's so remarkable about this period is the incredible pullback away from eating outside of the home to really cooking a lot with our families at home. And so if on the other side of this you find that people don't go back to eating at restaurants, eating at QSRs the way they used to, then it radically changes the approach towards a more FMCG kind of direction that entrepreneurs are going to have to follow. It could very well be that someone comes out with a vaccine soon or a very effective treatment, and as a result we snap right back to the way we were. And if that's the case, I don't necessarily think that people are that people will avoid restaurants forever. They'll be back at restaurants. And then I as I've said earlier, and as Omnivore have communicated, we think probably the easiest way to get to grow the plant-based segment is at the HoReCa level, right? Because again, people are much more experimental outside of home. So the answer is I don't know. It just depends on what the next 6 to 12 months look like.
So in fact, home delivery will continue to remain attractive. If you look at the trends that emerged in China after the 2002 SARS epidemic, that's when e-delivery and home delivery really took off for China. And even in the current lockdown, while they saw grocery deliveries increasing in the initial weeks, in the later weeks, it was cloud kitchens and restaurant delivery that took over.
So that's a great point, right? So contactless payment, the entire WeChat ecosystem where people are transacting and doing everything inside of Messenger OS, that's happening at like the 80% population level, right? Like in cities like Shanghai.
Yeah.
Whereas even in the US, if you look at Starbucks, the total volume of orders that happens through the app is like 30% in the metros, right? People are going in. And so is this a moment, again, this is the same question, Mark, and you said you don't know, but is this a moment that we could see we could start living on a different planet in India? Because I've always thought of Mumbai and China as different planets. There's basically nothing you can compare to a great degree about these two cities, right? So are we transitioning to a different planet or not? That's the question, I guess.
I think the grocery delivery habit may continue, right? So I'll give you a strange US example that I think is relevant here. The number of people like that used Instacart for the first time ever last month in the US, like huge. Like grocery delivery in the US was never a huge thing, and then all of a sudden has become massive. So I think that for players like, again, Big Basket, Swiggy, and Zomato, right? I think that habit of buying groceries, right, off of an app, I think that will go to it will shift to a different level. That curve will shift and continue to grow from that new level. Maybe it'll dip a little bit afterwards, but I think that adoption, right, that consumer habit change, that is probably a permanent change. And that speaks to, an opportunity for alternative protein companies to look at those cloud kitchens, the restaurants on those platforms, and grocery delivery via FMCG or even white labeled products if you're more of a manufacturing and value chain company. Those all could be, much more aggressive, a much bigger opportunity in the coming years because of COVID.
Yeah, and part of that might be underpinned by regulatory change, right? So now suddenly these businesses can transact directly with farmers perhaps in ways that they couldn't before, and that enables things that weren't possible before.
I think there's there are discussions going on about fundamentally putting the entire APMC ecosystem on pause to allow farmers to basically sell to anyone they want to because the situation right now is so dire. I think what's interesting is a lot of times during emergencies when things change, they don't go back, right? So if we finally get those reforms through, which people have been fighting for decades, we're in a whole new world, and that could be very interesting.
And this is what happens in wars and in global crises like this. So, okay, I'm going to combine a couple of questions here. So, could you speak to some hot things that you see for the alternative protein space in India? So, themes like indigenous crops or contract manufacturing, etc. And could you also touch on being a supply powerhouse for the global sector?
Sure. Themes that we find interesting. We think fermentation is really interesting. India has incredible fermentation talent. There have been big fermentation companies in India. The extent to which you can build on that ecosystem and build some companies doing fermented products, we think that's interesting. As we've said before, we do think India has the potential to be an alternative protein powerhouse. I've seen some of the questions. People are like, yes, we are huge consumers of pulses, but we're also importers of pulses. So how does that work? I think that works because, in an environment where value chains are built that process those raw materials into processed materials, right? We might continue to bring in some amount of legumes from Canada, right? But then we're processing our indigenous stuff in a processed form that's going for exports. I mean, this is what trade is. Just because the aggregate supply and demand of the unprocessed materials right now results in India being a net importer, right, of pulses, and it swings from year to year, doesn't mean that we can't be a net exporter of processed materials for alternative protein. And also, if the entire market of alternative protein heats up to the point that it can push the price of millets and pulses upwards, then you will see farmers grow. India has huge scope. It's a huge scope to grow more millets and pulses. Those acreages have come down dramatically over the years. Those crops are nitrogen fixing. They do not consume much water. So India definitely has a strategic advantage if we can get better germplasm and drive those yields up in a world that can absorb that can absorb that surplus. So I think that's so fermentation, alternative protein value chains. And then again, the biggest theme that we saw from a branded perspective was Horeca, right? Which, to be clear, that's on pause right now, but won't be forever. And that's where we see the most scope for product-based companies to grow the domestic market of consumption in India.
Shruti, anything to add there?
No, I think that covers pretty much most of the themes that we think will be exciting for India. I just club it with one more question that I saw here. We don't think that there will be a very large market for a complete replacement product domestically, because the vegetarians in India are they're not looking for a replacement. You need a replacement if you've been used to a particular product and you need a replacement. So export focused products, ingredients, those are themes that we think will be interesting. Functional substitutes.
Yeah, strongly disagree, but we'll agree to disagree on that. I think the major issue there is that you have people that want India is everything that's true about India. Its opposite is also true. There's cohorts that have to be true for them. The problem is those 50 to 70 million households that Mark is saying, that Epigamia was talking about, that they make decisions about themselves. They don't all live in one place, right? This isn't. Yeah, that density would be magic. It would be fantastic. Everyone just set up manufacturing on the perimeter and just supply into that city or that megapolis or whatever. But you get killed on the distribution in India because the infrastructure doesn't exist and your costs are just way too high. Okay, great. So Shardul, do you want to close out with any further questions, because we're out of time?
No, I think we can stop with the questions. We can always follow up with some of these things on email. But thank you so much, everybody, for joining. And Varun, if there's nothing else to add here, I'd just take a couple of minutes to quickly run people through JF Ideas community, and then we can close out the webinar.
Yeah, the only thing I would say to underline this conversation, because we had many questions coming in from folks who haven't been to one of this and haven't seen our sector or our work before. We'll send out a couple of pieces that I wrote after this that are quite brief, that just talk about what the value proposition of India is, what the need in India is, and where we see the market going. And we work closely with folks like Omnivore to think through some of these problems and then to skate to where that puck is going. So yeah, thank you, Shardul. We'll end it here.
Thank you so much. So just taking a quick couple of minutes to tell everyone about the GF Ideas India Smart Protein Innovation Community. A lot of you must have already received an email. There are instructions on how to sign up and about this community and go through our resources. And there are multiple resources put up for different stakeholders, whether you're entrepreneurs, investors, students, researchers. We try to cater to your specific needs by putting out different resources. And like Varun said, I'll be following up with an email to all the attendees with some of the readings that can help you better understand the alternative protein and smart protein sector in India. So I just encourage everyone to take a look at the registration emails that they received from Zoom. There are a couple of notes in the same email around joining this community. Just explore it and explore the resources there. Thank you so much, everyone, all the members of the community that have joined today, and everybody else who is curious about the sector. Thank you so much.
Thanks, everyone.
Thank you, Mark. Thank you, Shruti. Take care, everyone. Stay safe.
Stay safe. Take care, everyone. Thanks.